The standard account of Winston Churchill's 1930s runs like this. A former cabinet minister, sidelined by his own party after a string of political misjudgments, spends what his biographers call the wilderness years, warning an indifferent House of Commons about German rearmament. He is ignored, mocked as an alarmist, and vindicated only when the war he predicted actually arrives. It is a clean story about a lone prophet and a complacent establishment, and it survives largely intact in popular memory. What that story leaves out is money. By the spring of 1938, while Churchill was delivering some of his most quoted speeches on the danger from Berlin, he was privately close to losing Chartwell, the Kent estate that had become inseparable from his public identity. He had no ministerial salary. His income came from journalism, book contracts, and stock market speculation, and the third of those had gone badly wrong. The record that survives in his own brokerage correspondence shows a backbench politician on the edge of financial collapse, saved not by a party colleague or a government pension, but by a private financier most people watching this have never heard of. His name was Sir Henry Strakosch, and understanding what he did for Churchill, and what Churchill did in return, changes the shape of the wilderness years considerably. If you're enjoying this story so far, don't forget to hit the like button and subscribe. Drop a comment telling me where in the world you're watching from. I love hearing from you. Strakosch was born in Hollabrunn in Austria-Hungary in 1871 and made his career not in politics but in gold. He trained as an accountant in Vienna before moving to South Africa in the 1890s, where he built his fortune in the mining finance houses that grew up around the Witwatersrand goldfields. By the 1920s, he was chairman of Union Corporation, one of the major mining finance groups operating across South Africa and Rhodesia, and he had become one of the City of London's recognized authorities on gold, currency, and international monetary policy. In 1926, he served on the Royal Commission on Indian Currency and Finance, where his recommendations on linking the rupee to gold shaped British monetary policy in India for years afterward. He sat for a period on the court of the Bank of England toward the end of that decade. None of this made him a public figure in the way a politician or a press baron was a public figure. It made him something more useful to a man like Churchill, a private source of both money and information, operating largely outside the reach of Fleet Street. Strakosch's international standing had been building for over a decade before he ever became involved in Churchill's personal affairs. In the early 1920s, he worked with the League of Nations Financial Committee on the reconstruction schemes designed to stabilize the currencies of Austria and Hungary after their post-war economic collapse, work that put him in direct contact with the central bankers and finance ministries of half of Europe. He was, by the time Churchill needed him, not simply a rich man but a recognized fixer of broken currencies, the kind of figure governments called in when their own institutions could not solve a monetary crisis on their own. His fortune also grew sharply after September of 1931, when Britain abandoned the gold standard and the sterling price of gold rose. Union Corporation's South African gold mines, which had been selling their output at a fixed price for years, suddenly found that same output worth considerably more in sterling terms, and Strakosch's personal wealth rose with it. The same policy shift that unsettled much of the City of London left the man who would later rescue Churchill considerably richer than he had been a few years earlier, at almost exactly the moment Churchill's own finances were beginning their long slide in the opposite direction. Churchill's own finances tell a very different story from Strakosch's steady rise. After losing his cabinet position when the Conservative government fell in 1929, Churchill held no ministerial office again until 1939, which meant no ministerial salary, only his pay as a backbench member of Parliament. Chartwell alone made that arrangement unworkable. The House required a large domestic staff, an in-house farm, and constant renovation, and Churchill's own habits, the cigars, the champagne, the guests, were not cheap. To cover the gap, he leaned on two sources of income. The first was writing. Churchill produced an extraordinary volume of journalism and books through the 1930s, including his multi-volume biography of the first Duke of Marlborough, syndicated newspaper columns paid at some of the highest rates in Fleet Street, and eventually the manuscript that would become his History of the English-Speaking Peoples. The second source was speculation, and it was speculation that nearly ruined him. Churchill was in New York in October of 1929 when the stock market collapsed, and he lost a large share of his capital in the crash, watching, by his own account, a man jump to his death from a window above the street where he was walking. The lesson most investors took from 1929 was caution. Churchill's response, once the initial losses were absorbed, was to keep trading on margin through brokers in London, borrowing against his own portfolio to fund positions he could not otherwise afford, a pattern that left him permanently exposed to any serious downturn in the market for the rest of the decade. Strakosch and Churchill had known each other since at least the mid-1920s, when Churchill was Chancellor of the Exchequer, and Strakosch was among the financial figures consulted on questions of gold and currency policy. The relationship deepened after Churchill left office. Strakosch admired Churchill's early and persistent warnings about the rearmament of Germany, warnings that most of the conservative establishment treated as an irritant. Strakosch, with decades of experience reading industrial and financial statistics out of Central Europe, had his own reasons to take German industrial mobilization seriously, and he began sharing what he knew with the one prominent British politician willing to raise the alarm in public. That exchange of information ran alongside a growing awareness, within Churchill's small circle of friends and advisors, that Churchill's personal finances had become a liability to the very cause Strakosch wanted him to keep fighting for. A politician forced to sell his home to cover a margin call was not simply an embarrassment. He was a politician who might have to withdraw from public life altogether at the exact moment his voice on Germany was becoming more necessary, not less. Margin trading in the City of London in the 1930s operated with none of the disclosure requirements or investor protections that would later become standard on either side of the Atlantic. A client like Churchill could hold positions worth many multiples of the capital he had actually deposited, with brokers extending credit against the paper value of the shares themselves. This was profitable when markets rose and damaging when they fell, because a broker facing a falling market could issue a margin call demanding immediate cash to cover the shortfall, with no cushion and no regulator requiring the broker to warn the client in advance of how exposed his account had become. Churchill traded through several London brokers across the decade, and by the middle of the 1930s his exposure to American and British equities, taken together, was a sum that dwarfed his annual income from writing. Churchill had already been forced, on at least one earlier occasion in the decade, to consider selling paintings and other assets to cover losses. The house, bought in 1922 and rebuilt at enormous cost under his own direction, functioned as both his home and the closest thing he had to a physical symbol of the political comeback he still believed was coming. Losing it would not have been a private humiliation only. It would have signaled, to a conservative party already inclined to write him off, that the man warning them about Germany could not even manage his own household. By early 1938, Neville Chamberlain's government was still committed to the policy of accommodation with Germany and Italy that Churchill had spent years arguing against, and Churchill's position within his own party remained marginal. He held no office, commanded no formal faction, and depended for whatever influence he had on his ability to keep appearing in the Commons and in print as a credible, well-informed critic. Anyone hoping to remove that critic from the field did not need to defeat him in a debate. A forced sale of Chartwell, reported in the press as a simple story of a politician overextended on the stock market, would have done the job just as effectively, and without anyone in government having to lift a finger. Strakosch was one of the few people in Churchill's circle with both the capital and the discretion to prevent that outcome without anyone outside it finding out, and among the handful who might have been able to, he was the one who had the clearest personal stake in keeping Churchill's warnings about Germany in circulation. Clementine Churchill had watched this pattern build for years and had little patience for it. Her surviving letters to her husband return repeatedly to the subject of his stock market speculation, urging him to stop trading on margin and warning that the practice would eventually cost the family more than they could recover from. Churchill did not stop. He continued to treat the market the way he treated most other risks in his life, as something to be managed through nerve and self-confidence rather than caution, and the 1938 crisis arrived as close to a vindication of his wife's warnings as it was possible to get without actually losing the house. Clementine was not told the details of Strakosch's intervention until well after the fact, which was itself typical of how Churchill handled money inside his own marriage. The crisis arrived in March of 1938. On the 12th of that month, German troops crossed into Austria and completed the Anschluss, the annexation Hitler had been building toward for years. European markets, already unsettled after months of rising tension, fell sharply in the days that followed. For most investors, this was an unwelcome correction. For Churchill, holding margin positions built up over years of borrowing against paper gains, it was close to fatal. His brokers began calling in the shortfall. The sum required to cover his account, according to the correspondence that survives in Churchill's own financial papers, ran to roughly £18,000, a figure that in 1938 amounted to several times his annual income from all sources combined. Churchill did not have it. He instructed his solicitors to prepare Chartwell for sale, and estate agents were engaged to find a buyer. For a period of days in March of 1938, the man delivering some of the most forceful anti-appeasement speeches Parliament had heard that year was simultaneously arranging to sell the house that anchored his public life. Strakosch intervened before the sale went through. The exact mechanics of the arrangement were kept out of public view, and no announcement of any kind was made at the time, which is itself part of why the episode remained largely absent from Churchill's own version of these years. What the surviving records show is that Strakosch took over Churchill's exposed stock positions directly, absorbing the risk onto his own books, and covered the sum needed to satisfy the brokers. Chartwell was withdrawn from the market within days. Churchill's biographers, working decades later from bank statements, brokerage letters, and family correspondence held at the Churchill Archive Centre in Cambridge, have been able to reconstruct the shape of the rescue, even though Strakosch left no personal memoir explaining his own motives. He was 66 years old that year, wealthy enough that £18,000 was a manageable sum rather than a serious sacrifice, and by every account genuinely convinced that Churchill's warnings about Germany mattered more than the ordinary discretion a financier might exercise before clearing the debts of a struggling backbench politician. The arrangement did not end in 1938. Strakosch continued to manage a portion of Churchill's portfolio in the months that followed, structuring it more conservatively than Churchill had been willing to manage it himself, which spared Churchill a repeat of the same exposure during the further market volatility of 1938 and 1939. When Strakosch died in October of 1943, a naturalized British subject who had spent the war years advising on Allied financial policy, his will included a bequest to Churchill of £20,000, a sum that appears to have closed out whatever remained of the 1938 arrangement and then some. By that point, Churchill was Prime Minister, directing the war Strakosch had spent years warning him was coming, and in no position to need rescuing again. The debt, in the narrow financial sense, was paid off twice over. The question the standard account never asks is what that debt bought in the years before the war started, while Churchill was still just a backbench voice most of his own party wanted to ignore. The Strakosch rescue was not an isolated act of personal generosity. It sat inside a broader pattern that historians of the anti-appeasement movement have only partially reconstructed, in which Churchill's public activity through the wilderness years depended more heavily on private financial support than the standard heroic narrative admits. Churchill had informal ties to a small anti-Nazi pressure group known as the Focus in Defense of Freedom and Peace, whose funding historians researching the group have traced to a handful of city figures and businessmen alarmed by German rearmament. Strakosch moved in the same loose network of wealthy, internationally minded financiers who saw in Churchill a politician willing to say in Parliament what they were only willing to say in private correspondence and closed meetings. None of this reduces the £18,000 rescue to a single orchestrated scheme, and no surviving document suggests Strakosch treated it as a transaction with strings attached. It makes it something more mundane and, in its way, more revealing, the ordinary mechanism by which a politically inconvenient but well-connected voice gets kept afloat by people who have both the means and the motive to keep him speaking. Union Corporation itself gives some sense of the scale Strakosch was operating at. By the late 1930s, it was one of the largest mining finance houses on the Rand, with interests spreading beyond gold into base metals and coal, and Strakosch sat at the center of a web of directorships that connected South African mining capital to the merchant banks and clearing banks of the City of London. A man in that position did not need to raise £18,000 through any special effort. He could absorb it into his own accounts the way a large company absorbs a minor write-down, without troubling his other commitments or drawing the attention of anyone outside his immediate circle. That kind of financial scale is part of why the rescue left so faint a public trace. There was no loan to register, no bank to approach, no institutional paperwork beyond what Strakosch's own solicitors and Churchill's handled between themselves, and neither man had any obvious reason to want the arrangement discussed outside that narrow circle. If you're hooked on this story, make sure to subscribe and turn on notifications so you never miss an upload. Your support means everything and helps me bring you more emotional stories like this one. What Churchill received from Strakosch went beyond money. Strakosch's expertise was currency and international finance, and through the mid-1930s he became one of the sources feeding Churchill detailed information about how Germany was actually paying for its rearmament, information that gave Churchill's parliamentary speeches a level of technical specificity his opponents in government struggled to match. The mechanism Strakosch understood better than almost anyone in Britain was the one Hjalmar Schacht, president of the Reichsbank, had built to finance German rearmament without formally expanding the government budget or alarming foreign creditors. Schacht's system relied on so-called Mefo bills, short-term promissory notes issued by a shell company, the Metallurgische Forschungsgesellschaft, and guaranteed by the Reichsbank, which allowed German arms manufacturers to be paid for military production without the spending appearing directly on the state's books. To a currency specialist like Strakosch, that kind of off-balance sheet financing was immediately legible as evidence of a war economy being built at a pace the German government wanted to conceal, even from its own public. To most British politicians reading standard trade and budget figures, it was invisible. Churchill's speeches on German air rearmament through 1934, 1935, and 1936 drew on more than one private source. Ralph Wigram at the Foreign Office and Major Desmond Morton, running the government's own Industrial Intelligence Center, both fed Churchill information in ways that skirted the edges of what civil servants were supposed to share with a backbench opposition figure. Strakosch's contribution sat alongside theirs, distinct because it came from outside government entirely, from a financier with commercial reasons of his own, to track German industrial capacity through Union Corporation's international mining and metals interests. When Churchill stood in the Commons and cited figures on the pace of German aircraft production, or challenged government ministers on their own estimates of Luftwaffe strength, the confidence with which he did it depended on a supply chain of information that ran, in part, through the same man who had kept his house out of the auction rooms. The clearest public example came in the House of Commons debate on air estimates in November of 1934, when Churchill challenged the government's official assessment of relative British and German air strength and was accused by ministers of exaggeration. Subsequent events proved Churchill's figures closer to the truth than the government's, and that debate became one of the touchstones of his reputation as a prophet ignored. What rarely accompanies that story is any account of where the underlying numbers came from, or of the fact that the man supplying part of that data was the same one who would step in 2 years later to keep Churchill solvent enough to keep delivering speeches like it. 2 years after that debate, in a Commons speech delivered in November of 1936, Churchill returned to the same theme with even sharper language, accusing the government of squandering years in which it could have matched German rearmament, and instead allowing what he called the years the locust had eaten to pass unused. That speech is now one of the most quoted in his entire pre-war career, cited in documentaries and textbooks as the clearest statement of the case he had been building since the early 1930s. It was delivered 8 months after Hitler remilitarized the Rhineland, and roughly 18 months before the Anschluss and the financial crisis that nearly cost Churchill his home. The same information channel that shaped the November 1934 debate was still feeding him material in 1936, and the same financial exposure that would surface in 1938 was already building underneath him while he delivered it. The two relationships, one supplying data and one supplying solvency, were not formally connected. There is no surviving instruction from Strakosch tying his financial support to any particular speech or vote, and Churchill's own correspondence treats the two as separate kindnesses from the same friend, rather than a single arrangement. But the effect, whether intended or not, was to let a politician with no ministerial income and no party support keep functioning as though he had both. Every surviving record indicates Churchill believed what he was warning Parliament about long before Strakosch became involved in either his finances or his information supply. His warnings about Germany predate the 1938 rescue by the better part of a decade. What the record does show is that believing something and being able to keep saying it in public from inside a political system that wanted him quiet, turned out to depend on private wealth in ways the standard biography treats as incidental rather than structural. Take Strakosch out of the story and Churchill still gives some of these speeches, whether he keeps Chartwell, keeps his public standing intact, and keeps functioning as a full-time politician through 1938 and 1939 without the humiliation of a forced sale, is considerably less certain. For most of the 20th century, the Strakosch rescue existed only as a minor detail inside Churchill's voluminous personal archive, unremarked upon in the popular biographies that shaped his public image after the war. Martin Gilbert's official multi-volume biography, the closest thing to a definitive Churchill life story, acknowledges the 1938 financial crisis and Strakosch's intervention, but treats it briefly, as one episode among thousands in a life crowded with material. It took the financial historian David Loch, working decades later with access to Churchill's actual bank statements, brokerage correspondence, and household accounts, to reconstruct the full shape of Churchill's finances across his political career, publishing the results in a 2015 book that traced, in granular detail, exactly how close Churchill came to insolvency on more than one occasion. Loch's account draws on records held at the Churchill Archive Centre at Churchill College, Cambridge, the institution holding the largest collection of Churchill's personal papers, and on probate records connected to Strakosch's own estate after his death in 1943. Brendan Bracken, the young publisher and conservative backbencher who had attached himself to Churchill through the 1930s and became one of his closest confidants, was among the small number of people who understood how precarious Churchill's finances actually were. Bracken helped manage the practical side of Churchill's affairs at various points across the decade, from publishing arrangements to introductions in the city, and biographers researching the period generally agree he was aware of the 1938 crisis as it unfolded. What he knew about Strakosch's specific role, or whether he had any hand in bringing the two men's arrangement together, is not settled by the surviving correspondence, and no document places him directly inside the transaction. What the record does establish is that Churchill's inner circle, small as it was, understood exactly how close he had come to losing everything that gave his public position its weight. At the same time, that circle was helping sustain the political career built on top of it. That circle functioned less like a formal committee than like an informal insurance policy, made up of a handful of people with enough money, enough discretion, and enough conviction about the German threat to keep covering for a politician the wider party had already written off. Strakosch's will itself is part of the documentary trail. Probate records confirm the £20,000 bequest to Churchill, filed and processed through the ordinary channels of English probate law rather than any concealed arrangement, which is part of why the connection was always technically discoverable, even though it was rarely discussed. The bequest was not hidden. It was simply not treated, by the newspapers or the biographers writing in the decades immediately after the war, as a detail worth building a narrative around. Churchill was by then a wartime prime minister, and, later, a historical monument, and the story that suited both his own 6-volume memoir of the war and the broader post-war mythology was one of solitary, unfunded moral clarity. A financier covering his debts out of public sight complicated that story without contradicting it, which made it easy to leave out rather than actively suppress. What changed in recent decades is not the underlying facts, which were always there for anyone willing to read the primary sources, but the framing historians have been willing to apply to them. Loft's research reframed Churchill's financial history as a subject worth examining on its own terms rather than a footnote to his political career, and in doing so it surfaced a pattern that recurs throughout Churchill's life. A politician whose public independence rested, again and again, on private patrons willing to cover the gap between his income and his ambitions. The 1938 rescue is the clearest single instance because the timing lines up so precisely with the political moment it protected. But it was not unique. Churchill received support from wealthy friends and admirers at multiple points across his career, both before and after Strakosch. What makes the Strakosch episode distinct is the combination of financial rescue with substantive intelligence sharing arriving from the same man at the exact moment Churchill's public warnings about Germany were beginning to carry real political weight. The gap between what the archive has always shown and what popular history has chosen to emphasize is itself part of the record. No document was destroyed, no file was classified. The information simply sat in probate registries and bank ledgers, technical and unglamorous, waiting for someone with the patience to read financial records as carefully as most historians read political ones. The long consequence of the Strakosch arrangement is not a policy or an institution that still operates today, the way earlier financial histories trace a surviving central bank or a debt structure into the present. It is a pattern in how political independence gets financed, one that outlived both men and remains largely invisible in how democracies talk about the politicians they later celebrate as principled outsiders. Churchill's wilderness years are still taught and retold as a story of individual conviction triumphing over institutional complacency, and the conviction was genuine. But the capacity to act on that conviction, to keep a public profile, fund a household, and receive the kind of specialized economic intelligence that made his warnings credible, depended on private wealth willing to underwrite a politically inconvenient position. That dependency did not corrupt what Churchill said. It made possible his ability to keep saying it. The pattern recurs, in different forms, wherever a politician without institutional backing needs both money and information to sustain a position the establishment around him would prefer he abandon. It shows up in other national contexts, with opposition figures kept financially viable by sympathetic backers. And it continues today in the quieter forms of think tank funding, book advances arranged through friendly publishers, and paid speaking circuits that keep out-of-power politicians solvent and visible between elections. The mechanism is rarely illegal and rarely even secret in the way sensational retellings of history like to imply. It is simply left out of the story, because a story about private wealth funding public conviction is a less satisfying story than one about conviction alone. Popular treatments of Churchill's wilderness years have been slow to catch up with what the archival research has established. Television documentaries built around the 1930s still tend to open with the Rhineland or the Anschluss and move directly to the outbreak of war, treating Churchill's personal circumstances as background color if they mention them at all. Feature films made about the period focus on the political speeches and the parliamentary maneuvering, because a scene of a financier privately clearing a stock market debt does not translate easily to the screen the way a scene of Churchill addressing the Commons does. The Strakosch story survives mainly in the specialist literature, in Locke's book, and in the footnotes of the larger biographies, read by people already deep enough into Churchill scholarship to go looking for it in the first place. For a general audience, the version that persists is still the one without the financier in it, and the omission is rarely deliberate. It is simply easier to tell the story of the speeches than the story of the ledger sitting underneath them. Strakosch was not, in the end, the last private benefactor to save Chartwell. After the war, in 1946, the newspaper proprietor Lord Camrose organized a syndicate of wealthy admirers to purchase the estate outright and place it under the National Trust, with Churchill and his family permitted to remain in residence for the rest of his life at a nominal rent. The public framing, then as with Strakosch 8 years earlier, was gratitude toward a national hero rather than financial rescue, and in 1946 that framing was closer to accurate, since Churchill by then had led the country through the war he had spent the 1930s warning about. But the underlying mechanism was the same one Strakosch had used in 1938, private money, organized quickly and kept largely out of the newspapers, closing a gap that Churchill's own income could never have closed on its own. Chartwell was saved twice by men with capital rather than by any institution built to protect a politician's independence, and both times the saving was folded into the larger, tidier story of a great man's career rather than treated as part of its financial architecture. The house still stands today as a museum run by the National Trust, its rooms presented to visitors almost entirely in terms of the speeches written and the decisions made there, with little room in the guidebook for the ledger entries that kept the lights on. Return to 1938 then, with the fuller picture in view. Churchill stood in Parliament that year warning about a German war machine financed through mechanisms most of his colleagues did not understand, while his own household stood on the edge of a forced sale that would have removed him from public life at the worst possible moment for anyone who agreed with him. Sir Henry Strakosch, a mining financier from Hjalmar who had spent his career reading gold reserves and currency statistics rather than making speeches, closed both gaps at once, out of the public eye. He kept Churchill's house. He kept Churchill's numbers accurate. He asked, as far as the surviving record shows, for nothing in return beyond the continuation of warnings he already believed were true. It is the story of a banker keeping one man's warning about a war financially and factually possible to deliver. At the precise moment it mattered, in a transaction the official record still lists as nothing more than a name in a probate file and a line in a brokerage ledger. Thank you so much for watching until the end. If you loved this story, check out the other videos on your screen now. I think you'll really enjoy them. And don't forget to subscribe if you haven't already. See you in the next story.